Hi, my name is Christina Lynn. My business is Lynn Financial. I love to talk about money. Financial savviness is a learned skill that you can master. So today what I want to talk to you about is refinancing your mortgage. I had some people ask me the other day, Christina, what do you think about refinancing our house? I had talked with this mortgage lender and they said that they could get me a better rate on my mortgage than what I'm currently paying. I think it's going to be a good deal for us. We're going to save money in the long run. Just wanted to see what your 2 cents were on the matter. And so I asked a couple of questions, and it turns out they didn't quite understand how a mortgage works with an amortization schedule. But we're going to look at it here a little bit closer to see really if it's a good idea or not to refinance your mortgage. Okay, so here we are on calculatestuff.com. It's just a free online mortgage calculator or amortization calculator. So I put in the amount, that's how much my house costs, so I just was kind of curious to see what it would look like. I put in the interest rate. I think the current interest rates are a little bit higher. I looked online this morning, it was 4.75, they said is the current mortgage rate. For a 30-year term. And I wanted to see exactly what that would look like. So here it tells me that I'm going to be paying in total interest of $197,641 on top of that $275,000. So my $275,000 house turns out to be $472,641 is what I actually pay for it. I am totally still for mortgages in the right circumstance, because I think that allows us to accomplish the American dream of owning your own home. So if it's right for you, I'm not opposed to it. But before you fall into the trap of a shiny number with a refinancing rate, know how this works. So this particular couple, they had been into their mortgage for less than 10 years. I think it was like 8 or 9 years that they had been in it. And you can see here that in the first 10 years, you're paying way more in interest than you are the principal. So you can see like in this first year, it's more than double because we're just almost at the end of 2018 here, but 2019 shows a better figure where the interest is $10,863 versus the principal less than half at $4,891. So the way that the mortgage companies do that is they're really top heavy with the interest up front, and then at the end of the loan, this is at the end of the 30 years, you're only paying a tiny bit of interest and mostly principal. And I think that they do that to protect themselves against people who pay off their mortgage early. They want to get the service that they provided paid for. So that's why they top load it heavy with interest at the beginning of the mortgage, and as it ages, it tapers off so that you're paying more principal then. And so if they were to have refinanced at like 8 years, they really haven't put much of a dent in the balance. So here it's, starting out at 275, they only put 247, got the balance down to 247,000. If they refinanced, even if it was at a slightly better rate, I doubt it can be like a huge difference in a rate. They're going to start this whole process back over and paying way more interest up front until they get about to the halfway point. You can see here is where the balance really, you start to make bigger dents in the principal. So my point is, financing may not be all it's cracked up to be. If you do refinance, what I would suggest is figure out if there's any way you can make it work with a 15-year term. Have you ever, my parents always used to say, get a 15-year mortgage, and at the time of my first mortgage, I didn't understand, the importance of that, the significance, because to me it just looked like a much bigger payment. It went up from $1,300, like another $700 in this scenario. So it's like, well, that's not going to be feasible. But you can see here that you're paying so much less in interest over the life of the loan than you do with the 30-year mortgage. So in the last scenario, I was paying, I think, 147,000 and some change, and here with a 15-year mortgage, I'm only paying 91,000. I'm going to go back to make sure that that was 197,000 versus 91,000. So you're saving over $100,000 by doing a 15-year term. So it really makes a difference getting that 15-year term versus the 30-year term. Every situation is different, so I can't say that refinancing is not a good option for you, but it's important that you understand how those mortgage amortization schedules work so that you're going in with both eyes open. And I wish you the best and keep your chin up because you are an overcomer.